Good afternoon and welcome to today's CEIG Public Webinar, Managing Congestion in the Grid, Getting the Price Signals Right. My name's Robin Berg, I'm the Partnerships Manager at CEIG and I welcome you all here today. Now, I'd like to start with acknowledging the traditional owners of the land which each of us is streaming on from today. I am coming to you from the Wurrung country of the Kulin Nation, located here in Bayside, Victoria. And I'd like to pay my respects to their elders, past, present and emerging, and to all Aboriginal and Torres Strait Islander peoples whose lands we are streaming in from today. Now, before I start to introduce you to our panelists, I'd like, just for those of you that aren't familiar with us, to introduce you to our CEIG, or Clean Energy Investor Group, as the peak body representing the voice of investors in the clean energy market. Our members represent approximately 50% of total clean energy in the NEM, and our focus is the creation of investable clean energy market in Australia through reducing the risk and cost of equity. Now, I'm looking forward to today's discussion about CEIG's proposal for transmission access reform, which is the first investor-led proposal included in the shortlist of priority reform options from the Energy Security Board. And we're delighted that we're joined here today by ESB's CEO, Anthea Harris, and by Alex Sundakov at Castalia Advisors. Now, I'll be shortly handing over to our Policy Director, Marilyne Crestias, who will introduce our panelists and moderate today's discussion. But just in the meantime, some housekeeping. So we'll be starting shortly with a panel discussion. Each of our panelists will present before we'll open it up to your questions, which we expect will be around 2:45, 2:50. If you have questions, please feel welcome to submit them at any time throughout the discussion in the Q&A tab, and you'll find that at the bottom of your Zoom screen. Now, we'll be holding off all questions until all of our panel have presented. Now, we did have in our communications that we expected to close at 3:15 today, but we expect that we'll probably have you out of here by 3 o'clock. So thank you. I look forward to seeing you at the end of this session, and I'd like to hand over now to Marilyne Crestias, Policy Director at CEIG.
Thank you very much, Robin. I would like first to start by acknowledging the traditional owners of the land on which I'm standing today, the Wurrung people of the Kulin Nation, and I'd like to pay my respects to their elders, past, present, and emerging. So before I move to introducing our two very interesting speakers today, Alex and Anthea, I would like to first reflect for a second on the importance of access reform, the topic of today's webinar. So it's no secret that the national electricity market will need to decarbonise, and that's really as part of Australia's commitment to the Paris Agreement, and also as a need to decarbonise the electricity system. And we know that transition to a clean energy system will require a really large investment, both in generation and in transmission infrastructure over the next 1 to 2 decades. And investors stand ready for that challenge. However, we need to make sure that investment is delivered at the lowest cost possible, and we need to make sure that infrastructure that we build is utilised as efficiently as possible as well. So in August 2021, almost 1 year ago now, CEIG published its investors' principles, and out of that document, we ran a survey of our members that found that there was currently a risk premium on the cost of equity that we quantified to be between around 100 and 200 basis points. And the reason for that that risk premium was really a lack of revenue certainty for investors and often excessive risk that was taken on by investors. And a key risk area that was creating that risk premium was really the area of access reform. So in response to the investor principles document, and also in alignment with the ESB post-2025 market design work program, we have commissioned Castalia, who are here today, to put together a proposal for the reform of transmission access in the NEM. So as Robin mentioned earlier, this is the first time that an investor-led proposal has been included as part of a list of options to be proposed by the ESB, and we're certainly very pleased here at CEIG today to lead the discussion on that very important topic. So the format of today will be a panel discussion. Alex Sundakov will give a quick presentation on the CEIG proposal that you might have read about in the ESB paper. We'll then have a presentation from Anthea Harris. So both presentations should last about 30 minutes and we'll then move into Q&A. So please feel free to post your questions in the Q&A as we speak. I might introduce Alex first. So Alex Sundakov is the Executive Director at Castalia, and he leads the capital and investment advisory work there at Castalia. So that work includes due diligence of infrastructure for investment opportunities, transaction advice on PPP projects in a variety of sectors, including transport, energy, water, and health. Is also an expert witness in regulatory and competition policy cases in a number of jurisdictions. Alex has joined Castalia after a career spanning the New Zealand Treasury, International Monetary Fund, and also serving as the Chief Executive of the New Zealand Institute of Economic Research, which is a think tank. So a very, very well-informed consultant, and we've been very pleased here at CEIG to work with Castalia. It's been a very, very productive time. So I might hand over to Alex now to present on the model for access reform that is prepared for us, and hand over for your presentation, Alex. Thank you very much.
Thanks very much for inviting us to speak. And I'm going to try to cram obviously a lot of material into about 15 and 20 minutes. So I apologize in advance if I'm racing through some of the topics. And if you feel that you want to see more detail, and if I'm seem to be skirting over some of the issues, the two papers that Marilyne has highlighted, they go into this proposal in more detail. Look, the context for this is, I think, both the underlying reality that coordination of generation and transmission investment has been a somewhat elusive objective in our electricity system for a long period of time. I think that's it's fair to say that electricity markets built around energy-only wholesale markets and planned transmission investments, like Australia, like New Zealand, like some parts of the US, have always struggled with how to optimally coordinate investment in transmission and generation. And that struggle has, in many ways, got much more difficult as we're all going through transition to renewable investment. Because now, instead of a kind of relatively minor changes in the way that's in the underlying architecture of our power systems, we're seeing really quite massive and very rapid changes. The large-scale investment in renewable generation is changing the location of where generation is going to be relative to where power is going to be consumed. It's imposing new requirements on the transmission network, and it's congesting some parts of the system, decongesting other parts of the system, and causing kind of quite radical change. So I think in that context, ESB and Australian market bodies have been looking at this issue for quite some time and have been asking very sensible questions, and so in particular in this latest round of reforms to the market design for 2025, ESB has set out 4 objectives for access reform, for access to transmission infrastructure. And these are all very, very sensible objectives. These are making sure that there are efficient locational signals for generators, that generators build where transmission capacity is available, but at the same time that transmission capacity gets built where it is necessary. With renewable generation, clearly there's going to be a lot of storage investments associated with that, so there have to be also efficient locational investments for storage and for demand side management. And there has to be the overall system has to give confidence to investors, because so the fundamental feature of this very significant energy transition we're going through as a society is just truly massive amount of capital that's being deployed. And so even very minor changes in the cost of that capital can have big consequences for welfare and for how much we have to pay for electricity. And then, of course, making sure that the dispatch that occurs is efficient. So the proposals that we've been working on are really in trying to respond to those objectives and make sure that they're achieved. But we also think that it's very important to think about the signals and the incentives that the access regime creates in the context of where the electricity system is evolving. And there are probably 2 elements that are worth highlighting. First is the fact that as the need for that coordination between transmission and generation has increased, I think also we have quite rightly adopted a much more centrally planned approach to transmission investment. So we now have quite a sophisticated planning process around the integrated system plan. That there are well-established and kind of increasingly more streamlined approval processes for transmission investments that are part of the ISP. So we already have a framework for how the transmission investments are going to be made that is quite different to what it was even just a few years ago. On top of that, the other key element that sits behind our proposals is the fact that as you're moving towards more and eventually almost completely renewable electricity market, the competition for dispatch that we had in place before is going to play a much smaller role. And probably will become quite insignificant as a driver of efficiency compared to what we saw in our market design even a few years ago, and maybe the way it's still playing out today. So the kind of the logic behind transmission access, open access regime that we currently have is that we actually want generators to come in and to crowd out existing generators if they're more efficient. That's what competition for access means. So if you have a costly coal generator sitting in a particular area, and another generator can come in and outbid them and essentially crowd them out from the market, that's a net benefit. However, when all generators have the same marginal cost, and that marginal cost is 0, so from a social point of view, we no longer really care about which generator gets dispatched. Obviously, from a personal, individual investor's point of view, it can matter very much whether they get dispatched or their competitor. But from a social point of view, all generators have the same marginal cost, and all the costs are close to 0. That's the benefit for competition for dispatch becomes much smaller from a social point of view, whereas the ensuring that there's efficient capacity investment and reducing the cost of capital, minimizing the cost of capital, becomes absolutely crucial. So the biggest cost to society becomes not the fact that you may be running one generator a little bit more than another generator, or potentially consuming more expensive fuel rather than less expensive, which is the issue we have today, but rather that you may deploy too much capital and you may pay too much financial cost for deploying that capital. In that environment, the financing of the infrastructure cost is becoming absolutely critical, and we want to make sure that that's the regime that provides access to transmission gives us the maximum gain from minimizing that cost of infrastructure. So all of that, I think, leads to kind of the fundamental thinking behind the proposal is that we want to achieve the national electricity objective by avoiding inefficient generation and transmission investment, minimizing the total infrastructure costs, making sure that the locational signals are predictable, that they're forward-looking, and that overall they are linked to the transmission plan that is being put in place, and that minimize the cost of capital. I mean, Anthea will talk about various options. So obviously, I'm just discussing specifically our proposal, but I think it's worth sort of quickly highlighting that the main, I think, debate is between sort of models that focus on locational marginal pricing, on sending price signals around congestion in the short term, and models that are more kind of physically based, that are more linked to planning processes and focus on investment and long-term signals. And there are many varieties of those models. The model that we're proposing is very much one of those forward-looking long-term models. It's a physical solution, which we think addresses the trade-off between getting efficiency of investment and minimizing the cost of capital in better ways than sort of solutions that are based around trying to create short-term markets around congestion. That's a little bit of context. So what are the key elements of the proposal? Well, in essence, what we want to do is we want to have a framework that promotes generation investment in areas where there is either existing transmission capacity or where transmission capacity is being planned and being installed under the integrated system plan, and discourages generation overbuild in areas where there is insufficient transmission capacity. And we think that the best way to do that is through a form of queuing, where generation investors and storage investors receive a position in the queue based on the availability of existing or planned transmission capacity. And in essence, what it means is that those who get what we call the zero position in the queue, which is essentially a position that says that your generation capacity is compatible with local transmission capacity, they generally would expect not to be curtailed, or the curtailment will be only minimal. So it's kind of the idea that there will be a physical assessment of the transmission capacity in local areas, and if your additional investment will not lead to you being curtailed or you forcing curtailment of any other generator, then you can proceed with the zero position in the queue. Now, that I'll explain it in a second, but I think it's very important that not receiving a zero position in the queue doesn't mean that you cannot invest in generation in that location. What it means, though, is that if your position in the queue is higher than that, it means that you will not generally expect to be protected from curtailment, and that you, if curtailment is necessary, you will be the first to be curtailed. Now, we also think that in that context, I mean, obviously there is as I said, there is existing transmission capacity in various areas, and there is planned transmission capacity under the ISP, and in general, people will be undertaking generation investments in the context of that existing or planned capacity. But there will be some circumstances where the integrated system plan may not quite get it right, where it is actually efficient to add further transmission capacity, and where generation investors would be willing to pay for that. And so what we're proposing is that for the existing transmission network and for the planned transmission network that's going through the normal regulatory processes, the transmission charges are socialized in the same way as they're currently socialized to consumers, but that there is going to be a safety valve where if generators feel that they want to get guaranteed transmission capacity and they're willing to pay for it, and that additional capacity is not planned, doesn't meet the requirements of the integrated system plan or the requirements of the regulatory investment test, then they will have the ability to pay for that directly to make that happen. And by paying for that directly through transmission charge, they will guarantee that they will have access to that capacity, that again, that they will not be crowded out from it. So with queuing, the idea is that as I said, the incumbent and those generators that come in under the existing transmission capacity will receive a zero position in the queue, and generally will expect not to be curtailed. Now, there are a couple of kind of wrinkles around that. So first of all, of course, in the interconnected grid, the situation is always much more complex than just physical local transmission capacity, and we know that transmission congestion can be caused by events that are happening well outside of the local transmission area. You know, the wind blows in Tasmania, and you can have congestion in Queensland. So that's all absolutely true, and it would be extremely difficult and generally inefficient to provide absolute guarantee of dispatch, or to try to model the kind of the curtailment risk in each connection point on the basis of the overall kind of market impacts. So our proposal is somewhat more simplified. Essentially, what we're saying is that given the complexity of the problem that you're trying to resolve, and given the increasingly diminishing marginal benefits of getting it absolutely right, you get a sensible compromise by tying position in the queue to local transmission capacity, knowing full well that would mean that it doesn't provide you 100% guarantee of dispatch, that some curtailment will occur, and there will be some events that will be happening in the interconnected grid, but it's close enough and it's good enough allocational signal to ensure efficient outcomes without trying to create a regime that's overcomplicated and tries to solve the problem to the degree of refinement that actually is not needed. The second issue is what happens if there is more generation that wants to go into a particular area than there's available local transmission capacity. Now, obviously, if generators are coming in and asking for connection and there is enough capacity, then they don't need to be, they're not competing against each other. All investments can be accommodated. But at some point, it may be that there will be more generators wishing to connect in an area than there's available or planned transmission capacity. So again, we think that's that a kind of a simple solution, rather than trying to create an all singing, all dancing market where you kind of always have competitive auctions for available capacity, it would make sense to have a regime where if there is enough available capacity, just kind of first come, first served. People apply, they get their capacity, and then the next person comes and gets their capacity, and so on. If it becomes obvious that there is more demand than there is available capacity, then some sort of simplified auction system is possible, and auctions can be held. But again, I think our approach is let's try to kind of simplify the process and not necessarily look for a kind of a theoretically optimal solution, but for something that's practical and simple. The idea is that that your place in the queue cannot deteriorate, and the place in the queue will be granted to a generator. We think should be for a period of between 10 and 15 years, essentially for time that's long enough to be consistent with a typical financing structure for project financed energy investment, which would make sure that there is that kind of period of guaranteed position in the queue, and that would underpin the security of revenue and therefore reduce cost of capital for the investment. At the end of that period, two things may happen. One is that there may be no other investors wishing to get that capacity, in which case there's the generator that previously had zero position in the queue reapplies. It's first in, and it gets its position in the queue renewed. Or there may be other people queuing for the position in the queue, in which case an auction needs to be held. In that case, the existing investor will be in a good position to win that auction because they've already, most of their costs are sunk. And they will be in a better position than newcomers. But if there is a more efficient newcomer, then they will come in and they will secure that position, which is exactly the kind of competition for access you want. Because if in 10, 15 years' time, technology has moved so much that it's actually, there's a lower cost way of entering the renewable market. And it's more efficient to build something new rather than to operate with sunk capital, then the market will reveal that by the new entrant winning the position in the queue. As I said, with transmission charges, we think that's really a safety valve for those very rare situations where the investment approval process under the integrated system plan is not sufficient, and for those situations where generators are willing to pay transmission charges, there would be no need for Red T approval. But you would still have a regulated transmission charge to kind of standardize and simplify the process for entering into those contracts. I mean, at present, in principle, generators can negotiate with transmission service providers, but it's a complex, bespoke process, and simplifying it and incentivizing it would lead. Simplifying it would incentivize kind of more efficient outcomes. There are a number of practical issues that need to be resolved in making this queuing system work, we think that there's still clearly significant investment of effort required to resolve some of these questions. One of them, the queuing system is focused on the investment time frame, on the long-term decision about where to locate. But there will be also a question of how does the short-term, the operational time frame dispatch algorithm work, and how will the queuing system be affected by the way that the algorithm operates. So now, the dispatch algorithm kind of resolves all the elements of dispatch simultaneously, so it doesn't do it step by step, but it's useful to think of it kind of in a simplified way, in a step by step. And if you like, what the algorithm does, it's first determines the bid price of the generator, and those that are bidding the lowest price go first. But those that have the same low price, there are other factors that matter, such as the marginal loss factor, and the congestion contribution factor, that determine who gets dispatched first. So what we're saying is that your position in the queue will be another factor that will be added to the algorithm. But of course, that position in the queue will also need to interact with all those other already existing elements, such as the bid price, MLF, and the contribution factor. And it'll be important to make sure that these issues are coordinated. As we've been debating this proposal, a number of parties have raised the issue of the contribution factor, which is essentially about the amount of energy that would need to be dispatched to offset the contribution to congestion caused by each generator. And there's a concern that the contribution factor, and in some locations the marginal loss factor, could swamp other considerations, and kind of lead to a winner-takes-all outcome in the market, and the position in the queue may turn out to be not sufficient protection given those other factors. So we think that obviously that needs to be worked through. We think it can be. I mean, the issue of the impact of the contribution factor on dispatch is something that affects every model that's been proposed. And it's something that would need to be resolved kind of regardless of how we go forward with market reform. But what we think that's in particular the kind of the degree of refinement that's currently being applied to calculate marginal loss factors and contribution factors is actually going to become less and less necessary, simply because the losses that are going to be that may be occurring in the system, or the additional energy that may need to be dispatched, will actually come at increasingly at something close to zero cost. Because if you have a system that's largely dominated by renewables, during the periods of congestion, the periods of congestion are likely to occur during the times when the renewables are all trying to dispatch because the sun is shining or the wind is blowing, and at that time the kind of the cost of that additional unit of energy is either being lost or having to be dispatched is either very, very low or pretty much zero. So we think that there are some, again, kind of practical ways to resolve these issues while making the queuing system as a concept, as a principle, work. We equally think that the queuing system will provide appropriate incentives for the location of storage, because I mean there are two reasons why you would invest in storage, if you like. One is to shift energy in time, right? To take energy during the time when the renewables are producing them, and then to deliver it during times when the renewables are not available. But that storage, most generators would prefer to have on the other side of the transmission constraint. They would like to have that storage as close as possible to consumers, because that way you're really kind of minimizing your market risks. The other possible reason you may be investing in storage is storage as a way of dealing with local transmission constraints. So in other words, if there is not enough capacity to evacuate all the renewable energy during the time when peak sunshine or peak wind, you would be able to store that energy and then evacuate it at other times when there isn't so much renewable energy being produced because of those natural variations during the day. Again, the queuing system really sends, I think, exactly the right signals, because what it says is that you can combine renewable generation with storage, either by investing together or by having standalone storage investments doing deals with renewable generators, as a way of improving your queue position. So if you know that you have too much generation capacity relative to the local transmission capacity at peak time, when all the other generators of the same type are also generating, and that you would not be able to get queue position 0. But if you took some of that energy and put into storage, and exported it from the area during the time when there's sufficient capacity available, and your capacity at peak time was aligned with the transmission capacity during the peak time, then you would get the 0 position in the queue, and you would be largely protected from curtailment. We think that would be a very attractive reason for why you would invest in local storage rather than storage somewhere else on the system. Now, everything that I've been kind of talking about really emphasizes these long-term issues of sending the right locational signals for where the investment is undertaken. And this really, I think, matters more and more as we move towards renewable investment, because almost all your cost is upfront capital cost. But nonetheless, there will be, for quite some time, there will still be issues of ensuring efficient dispatch. Not all generation is going to be zero marginal cost. And so I think, quite rightly in its review, ESB has also emphasized sort of some of these short-term issues of ensuring efficient dispatch. Now, our analysis suggests that this is not perhaps such as a burning topic as some may have suggested, but to the extent that these short-term issues do arise, we think that there are a number of interesting ideas floating around how to create a congestion relief market, which is a short-term market, and we certainly see the queuing model that we're proposing coexisting very, very nicely with a short-term congestion relief market. If anything, the two arrangements, a long-term queue arrangement and a short-term congestion relief market, will reinforce each other. That's probably all that I can do in this very limited time. And again, if you have any questions, please ask them, or please read the papers. Thank you.
Thank you very much, Alex. That was a very useful run-through of our model. And yes, it's always difficult to present everything in such a short amount of time, but you've done very well, I think. So thank you for that. We might now hand over to Anthea Harris, the CEO of the Energy Security Board. So Anthea was appointed CEO back in March 2022, earlier this year. Prior to that, she was the Deputy Secretary of the Energy Group within the Victorian Department of Environment, Land, Water and Planning. She's also held the position of Lead Deputy Secretary of Strategy and Planning Group in the Victorian Digita department, which is focused on economic development. And she's also worked as the CEO of the Climate Change Authority. Thank you very much, Anthea, for being with us today. I might hand over to you for your presentation.
First of all, I'd like to say thank you very much to the CEIG for the opportunity to be here today to talk about this really important topic. So as I think probably everyone in this call would know, the ESB published its transmission access reform consultation paper a couple of weeks ago, and submissions are now due on the 10th of June. And the paper really builds a lot on the work conducted by stakeholders right across the industry, for which we're very grateful. And 3 of the 4 shortlisted models that we've put forward in that paper are based on proposals put forward by industry, and the 4th incorporates substantive changes to reflect stakeholder feedback. So we really are delighted at the strong levels of engagement, and we really do want to thank CEIG and the work done by Castalia for all the hard work that's gone into all of the contributions made to date. So today I'd like to talk to you about a bit more about why access reform is needed in the ESB's process. So just for the avoidance of doubt, from the ESB's position, it's not an either or thing. We can't say that we're only going to solve congestion or we're going to build new transmission. New transmission is clearly critical to an orderly transmission. And that's why the ESB has worked on a number of key projects designed to promote more transmission, including major reforms to the ISP projects. And there is more work going on, including the AEMC's transmission planning and investment review, to make sure that transmission really is built in a timely manner at least cost. However, this is all about balance. We need to look at generation and transmission. So if I just go on to this next slide, that congestion is increasing even after the actionable ISP projects are built. So in the same way as transport planners will know that you can never, and it's never sensible to think that you can build your way entirely out of road or rail congestion. Same way in the electricity system, we don't think that we will ever be in a situation, and nor is it a sensible thing to aspire to have precisely no congestion in the system at any point in time ever. So the AEMO's 22 draft ISP forecast that congestion will continue to increase even after all of the actionable ISP projects are built. The draft ISP projects a need for 63 gigawatts of transmission network capacity to accommodate approximately 127 gigawatts of utility scale Victoria variable renewable energy by 2050, i.e. a transmission capacity is less than half of the utility scale VRE. It should be noted that the lost output due to transmission curtailment and spill in this chart that I'm showing up on the screen now, this is a cumulative chart, but it does show that in 2050, approximately 5% of output is lost due to transmission curtailment, in addition to approximately 15% of output that AEMO expects to see voluntarily switched off for economic reasons. So that's even after all of that build, it's still a significant issue. So these are our messages on why access reform is so important. So the ISP already points to a significant and growing congestion problem. In practice, we expect that it's probably going to be worse than that because we rely on the market to deliver investment, and it might not go exactly as the ISP has planned that it would. So we know that in some cases we see generators connecting to locations where a lot of the time they're not adding new renewable energy to the system. Instead, they're displacing existing renewable energy regulators, renewable generators. So because our market design doesn't send precise signals with respect to location, we are likely to see more congestion than necessary. So, and when congestion occurs, we can see perverse market outcomes, such as wind being spoiled so that we can dispatch more expensive and emissions intensive coal. So sometimes that might be for valid technical reasons, but sometimes it's just our market glitching. So we can deliver an energy transition more quickly and cheaply if we introduce more accurate signals. If we go on to the next slide, thanks. Now, Alex has already raised this in his previous presentation, but this winner, I just want to talk about this winner takes all issue that exists in our market. So a key theme of our consultation paper is to highlight the role of generator coefficients in driving winner takes all outcomes under our current arrangements. So each constraint equation in NEMD includes a coefficient for each generator, which reflects the extent to which a generator is affected by the constraint. And they're highly specific and can be specified to several decimal points, as Alex was talking about, with only tiny differences between the generators that are very close together. And so when faced with multiple bids at the same price, as can happen in the presence of congestion, NIMD is going to dispatch the generator with the lowest coefficient first. Now that's what it's designed to do. It is consistent with dispatching the least cost combination of resources, but it also has significant financial consequences, and it means that the costs of congestion are very unevenly shared between generators. A generator's coefficient, it's really complicated and opaque and dynamic, but it can have really big impacts on levels of dispatch. So in contrast, if we think about if a rival shop set up next door to a shop selling exactly the same products, exactly the same levels of service, we would probably tend to see customers dispersed between the two. But in our market, we have this situation, selling exactly the same product, but we have a winner takes all. We don't see customers in effect being dispersed between the two. We see one generator being dispatched and not the other. And new entrants have the chance to select a location that optimises their coefficient, whereas an incumbent's location decision is fixed. So once you've made the decision, once you have already exist, there's nothing that you can do about the impact of other generators coming and locating nearby. So these, as has already been pointed out, these arrangements really amplify the levels of risk faced by investors, with the consequence that investing in the NIM is riskier than it needs to be. And so we are on a unity ticket with the CEIG on identifying that as a problem that really needs, that we do need some kind of solution to. So we move on now to slide 7. So, and Alex again has touched on this, we really do need to think about how we use storage and flexible load in our system. So as Alex said, you know, if you're building a battery, all your incentives now are to locate close to load in an unconstrained part of the grid. And we really are missing a trick here in terms of being able to be located closer to renewable energy generators, for example, in a res, and being able to time shift some of that energy and reduce congestion and be rewarded for doing so. At the moment, this is not what our market does. So storage providers are losing a potential value stream, and the NIM's losing an important tool to manage congestion. So Alex talked about incentives for batteries under investment timeframes approaches, and I'd like to also point out in our paper we've talked about both of our shortlisted operational timeframe models would create incentives for better incentives for batteries and also flexible load, so things like hydrogen, to locate where they're needed most and to operate in ways that benefit the broader system. So the congestion management model does this through more accurate price signals that reflect the cost of congestion, creating larger spreads and hence bigger arbitrage opportunities. And the other operational timeframe model, the congestion relief market model, enables congested generators to pay for storage and flexible demand to relieve their congestion. So in both cases, boosting the business cases for those types of investments. The next slide, please. So another important driver for access reform relates to interconnectors. So at present, when the value of congested energy flowing from higher price region to a lower price region reaches a certain value, AEMO is required to intervene in the market to clamp the interconnector. This is done to prevent the accrual of negative interregional settlement residues, which increase the costs borne by consumers. So these arise because generators are dispatched based on their offer price, so typically minus 1,000 in the presence of congestion, but they're paid a different price, so they pay the regional reference price. And so we're already seeing an increase in clamping as more generation connects near regional boundaries. So with the introduction of Project Energy Connect, we will for the first time have loop flows between regions, so between Victoria, New South Wales and South Australia. Due to the way the market works, that we expect that the New South Wales Vic SA triangle will experience greater counter-price flows. If we leave the market design as it is, we'll increasingly need to clamp interconnectors to avoid making customers pay unnecessarily high prices. And that means there's a risk that these very expensive new interconnectors will not be able to be fully utilised, and consumers will not receive the full anticipated benefits of those investments. So rather than switching off the interconnectors, a much better solution would be to pay the dispatch generator the correct price. So go on to the next slide. So I'll just talk a bit now. And the next slide again, thanks. So slide 9, shortlisted models for design. Great. So in November last year, the ESB gave stakeholders the opportunity to submit alternative models. And we had a look at all of these alternative models. And so we've tried to take the best ideas from all of them to progress a subset of ideas. So we've identified 2 models for the development for each of the investment timeframes and also for operational timeframes. So the models include the grid access reform model developed by CEIG and Castalia. So we need to pick one of each, one investment timeframe model and one operational timeframe model, and we can mix and match between the 2. They are all compatible with each other, and so we combine them. We should be able to meet our access objectives. So the only caveat is that we pick the CEIG model in investment timeframes, i.e. the queuing model, will have consequences for how we design the operational model. You would have probably all caught up with the fact that by now that based on stakeholder feedback, we propose to move away from the CEMM RES model that had been put forward earlier, which had a system of rebates going to those who are located within a RES, moved away from that to now a proposal in that model, whereby all generators, existing and new, would receive rebates. We are seeing a degree of convergence among the models, but of course there are still important differences that remain. We are working very hard to try and get all of these models, including the industry proposed models, to get them to work. And to the extent that we think we need to make any modifications in order to get them to work, we'll obviously work closely with industry and make sure that we try and preserve the features that are really important to industry, which is why they put them forward in the first place, make sure we don't lose that important essence of them. So the next slide, please. So just going in terms of our process. So our process from here, we're going to consider submissions to our consultation paper and feedback from our various working groups to further develop the various models. We're also in that process of hiring consultants to help us model the various operational timeframe options so we can get a better feel for what the likely impacts of that are going to be. So there's a lot to do in all of that. And our plan is to select one of each, so one investment model and one operational timeframe model, and consult on that in our draft recommendations paper later this year before presenting our final recommendations to ministers at the end of this year. If ministers accept those recommendations, there'll be a further rule change process that we'll need to be going through. So our closest milestone from here is that submissions are due on the 10th of June. So just a reminder, we very much look forward to reviewing your submissions and again, to closely collaborating with the CEIG and other stakeholders as we progress our work. So thank you.
Thank you very much, Anthea. That's been a very informative view of how the ESB has engaged with all market participants and how it's making decisions and what the next steps are, which is really fantastic to hear. So I might encourage the audience to put some questions in the Q&A box. If you have any questions for the panel, for Anthea or for Alex. While you type in your questions, I might start by asking a couple of questions myself. And I might start with Anthea. So given the recent results of the federal election and the change of government and new policies, particularly in the energy space, What do you think it means for the work of the ESB? So would you expect that work program to continue as planned, or would you expect any changes? And if any changes, are there any things that you would want to see coming out of an amended reform agenda? So for example, would it be time to think about an emissions reduction as part of NEM governance and as part of the work of the ESB?
Thanks very much, Marilyne, for the question. It's probably a bit early to tell, and we certainly haven't had an opportunity as the ESB to brief an incoming minister or anything like that. And ministers haven't had a chance to have a new meeting with a new chair. So this is entirely speculative with no substance whatsoever at this point. So some of the things that might be possible, obviously, the new government has a very significant the Rewiring the Nation fund, and so I'm sure there'll be a lot of discussion about what the best purpose for that might be and how that might work. In terms of the key priorities, I think from an ESB perspective, we would hope that things we think we need, like access reform and a proper signal for capacity in our market, we hope that those would remain priorities. We certainly see them as still as priorities. I think, Marilyne, you've probably put your finger on the issue that has been a bit of a gap in the clear directions and tasking of the ESB to date, and that relates to emissions. So I'm sure many market participants would all like to see a bit more clarity in that area, so that when we're going around designing all sorts of changes to our market, we've got a very clear emissions objective in mind to make sure that that's something that we are that making sure our market can achieve emission reduction goals.
Great, thanks a lot, and that's certainly something that the market would welcome. I might just ask a follow-up question.
Marilyne, there was a question right at the start in the Q&A about recovery of transmission costs.
Yes. Do you want to cover that, Alex? Actually, I was.
Oh, sure. I'll respond to that. Look, having had the misfortune of being involved in the New Zealand transmission pricing debate over the last 15 years, where New Zealand had gone through an extremely complex exercise of trying to figure out how to put in place a beneficiary pay system where generators and the value of transmission was allocated between users and between generators and load. I honestly think it's not a worthwhile exercise. At the end of the day, as long as you have fundamentally a planning-driven, a regulatory-driven transmission investment framework, the payment signals don't really make any difference, and it's much more straightforward wherever possible to recover the cost of transmission from final users, rather than kind of trying to have this done in some sort of semi-market way. So I'm not really in favor of kind of an attempt to create a market where the market doesn't exist.
Thanks for that, Alex. So we're now right on 3 p.m. So before I hand over to Robin Berg to wrap up the session, I might just quickly thank Anthea and Alex for your participation today. It's been very useful to have you with us, and thank you very much. And I'll now hand over to Robin.
Thank you, Marilyne, and thank you for moderating today's session. And thank you to our panellists for what's been a really illuminating discussion. To our panellists, Alex, thank you. You've really helped shed some light on the CEIG proposal, and I'm sure that everyone's feeling fantastically well informed about the details of the proposal. So thank you. And thank you also, Anthea Harris, for speaking with such clarity about the ESB's approach to this complex task of progressing access reform. And it's been valuable for all of us, I think, to hear how the ESB is approaching collaborating with market participants. So thank you to you both. Finally, for those that aren't familiar with CEIG, I just want to bring you up to speed on our purpose, which is to provide advocacy and leadership in order to accelerate clean energy investment in Australia. And we do this through advocating for best practice policy and regulation to enable private investment required for Australia's energy transmission. I mentioned our members earlier. Amongst our members, we have 11 gigawatts of installed VRE, which equals a total of 50% of the total clean energy in the NEM, and a portfolio value of $24 billion. If you would like to learn a little bit more about our work, can I suggest that you look to download the CEIG's investor principles on our website. You'll find a download link on our homepage, and it gives you details of the 5 reform principles that will enable low-cost capital for clean energy investment. Now, we'll have other events that will be coming to you soon, but if you'd like to keep in touch with us in the meantime, please feel welcome to visit our website, join the conversation on our social media channels, or feel welcome to contact the Secretariat or myself directly. And particularly if you had any issues in today's session, I'd love to hear from you. So that's a wrap for today's public webinar. Thank you for joining us. Please don't forget to complete the very short post-event survey as you leave this webinar. It will certainly help us improve your experience in the future. And have a lovely day, everyone. Thank you.